All right. So your syllabus content is what we want to look at first. So your syllabus is broken down into you knowing the ethical, professional, and regulatory framework or regulatory considerations or ethical consideration or professional consideration. And that part carries 25 marks, 20 marks, sorry, 20 marks. So you will see a question that will ask you, it will give you a case and they will ask you what are the ethical and the regulatory or professional issues surrounding the case. So what you are going to do is that what we'll be learning here, you'll be picking certain things out to be able to answer the questions of the case, and it's 20 marks. And please, what you have to know is that this one is automatic. Whether you like it or not, it is coming in your exam, whether ACCA, whether ACA, it's coming. The only thing you don't know is the case that is coming. So if you understand the dilemma, if you understand everything surrounding it, you'll be able to handle such situations, okay? So then you have, after you have done with this, then we will be looking at audit planning, and audit risk and evidence. So that side to earn you something around 25 marks. So clearly, if I'm to show you what ICA has actually brought out, this is what you'll be having. Just a minute. This is what you'll be having. So I need you to prepare well, because, and you can't leave any part hanging, okay? So it is just segregated in such a way that if you can master these areas, it means that you are always so prepared for the paper. So it's clearly seen. And this is how the ICA, yes, have guided it. You see what I was discussing with you. So the audit and assurance, the gathering of evidence. So that is what you have, is 20 marks. So gathering of evidence is 25 marks. Up to the engagement plan is what you have as another 25 marks. So basically, that is what you are doing. That is what you are doing. So please, I will need you. Fine, I'll try my best to record. So as you saw, we have audit planning, audit risk, audit evidence for 25 marks. Then you have review and report. Okay, audit review, audit report, you have another 25 marks. So this one sums up to 50 marks. Then you have a public sector aspect of auditing. So public sector aspect, please, can you hear me?
Yes.
Hello? Yeah.
Sir, we can hear you.
All right, and I hope you are following too. Then you have current issues for the last 10 marks. Okay, so in all, you have 100 marks, and this is how you are chasing your paper. All right, so what I'm going to do is that, and please, audit is not a paper where you need to practice. May I ask, How many of you are doing corporate reporting in addition to this one? Because I will need that. I will need your knowledge in corporate reporting. How many of have you all done corporate reporting? Or how many of you are doing corporate reporting? Please let me see. You should respond to me, or you should put something in the chat note. Let me read, because it's very important to for me to know, so that I can know how I'll.
Yeah, I'm doing corporate reporting.
Please, who is that? Amos.
I'm doing corporate reporting.
Danny, you're also doing corporate report. What are our Prince?
Yes, sir.
This Amos. Yes, I'm doing corporate reporting.
I
So
had
I have
corporate
Amos doing
reporting
corporate
last
reporting.
2 citizens.
Prince, are you also doing corporate reporting?
No, I had corporate reporting last 2 citizens.
Okay, so you have it already. All right, that's fine.
Yeah.
And Danny is also doing corporate reporting. Okay, that's fine. So Prince, I will need you to bring back your knowledge of corporate reporting, because we will need it here.
Okay.
We will need it here at this point. Yeah, when we get here, we will need the knowledge. So what I'm going to do is that I'm going to take so and we have 10 weeks to go to your paper. All right, 10 weeks, then you are writing the paper. But I don't use 10 weeks to teach audit. I finish very early, then we practice solving questions. So that is how I basically do it. And by far, I'm not actually, it's when I started teaching audit very long time that I had one person failing in my class. Since then, nobody has ever failed in my audit class before. So please brace yourself. You can't spoil my record. All right. So what I'm going to do is that we are going to use 3 weeks to deal with this. 3 weeks. I think the 3 weeks guys even more. But because we will have to practice solving the problems, we will use 3 weeks. This one is more about problem solving. We are going to use 2 weeks for this. This one, review, we will use 2 weeks for this. Public sector, we will use 2 weeks for it. Then the current issue, we just use a week to discuss current issue. So please, I need your involvement. It's very, very important to me. So what I'm going to do is that we are going to go through this, but I have already pre-recorded a video on this. So I will send to you. I've recorded a video on this. I'll send to you a video on this. I'll send to you. So it will speed us. Okay. So you have to be very, very fast. You have to watch the video. The essence of this class is not about me teaching, it's about me solving questions. So the past questions and likely exam questions, just to prepare you. Once you know the techniques, you'll be fine. All right. So first of all, let's start with how audit is like. Please, let's also inform ourselves that this class is supposed to be a 2-hour class. I think is the 6 o'clock or the 6:30 okay with you?
Sir, 6:30 will be okay.
All right, so we will stick to 6:30.
Yeah, 6:30 will be okay.
Yeah, so 6:30 to 8:30, I'm done. So that is how we are going to look. All right, so let's start discussing what audit is all about. Any idea what audit is about? I gave you the slide in advance, so please, I expect that you've read something. Any idea what audit is about? Now, to start
Can I try?
Yes, please.
Okay, so how I appreciate audit is there are people who put their investment or they invest in the company. but they will appoint some people like management to work on it. So in that case, they will also go ahead and appoint an independent person to check on what management are doing. That's my appreciation on audit.
So who appointed the independent person?
Hello?
You said somebody appoints the independent person. Which party appoints the independent?
In the like the shareholders.
The shareholder. So that is Annie. Okay, anything from Amos and Prince?
It's like an independent person examine the books of the organization. Yeah, to review their books to see if
Okay.
they are doing the right thing. Yeah.
Yeah, exactly. So that is a viewpoint of audit.
Yeah, audit can also be said to be an examination of activity of the, those being employed to act on the shareholders' fund. So it's just an assessment of how well or how good or bad managers of shareholders fund has been handled in the years past.
All right. Thank you very much for all your opinion. And I wish you keep on doing this in every class so that the class will be very interactive. All right. All right. So the word audit, like I quoted in your manual for you, is derived from the Latin word audio, and audio means to hear. All right. So it's to hear, and the main thing is that we are trying to give an expression that conveys the what audit is all about in the ancient days, how it started. So somebody will be giving information to another person. Now, when I don't know how many of you have watched this movie before, Into the Badlands. You people don't like watching
Come
movies.
again?
Into the Badlands. It's a movie title.
No.
Okay, so you've not watched it before. All right.
No.
So that is how all this started. So what happens is that there is a king, all right? And in that movie, they used to call them barons or baronesses. All right. So the idea is that there is a king, and there is an individual who is also in the country or in the nation or in the kingdom. All right, depending on how you want to view it. Now you see that, so let's say this is the individual. You see that what happens is that, okay, even before I move on, but I hope you people have heard of the Ebunu and Ebusa system of farming that used to be in Ghana, in the Ashanti Kingdom.
Yes.
Yeah. So let me
please.
even use the Ebunu and the Ebusa principle. So you see that in the Ebunu and the Ebusa principle, you have a landowner, right? And you have a farmer. You see, what you see here is that the farmer does not own the land, but the landowner owns the land. So what happens is that the landowner will give the land to the farmer, and the farmer will farm on the land. At the time of harvest, what happens is that if it is Ebunu, then it means that this farmer has to divide the entire harvest into two. Okay, when he divides it into two, then what you see is that he will give the landowner this part of it, and he will keep this part of it. All right. But the whole issue is that who is there to check that the harvest that has been done, it is exactly half that the farmer is giving to the landowner. All right. So it is this same principle that was happening in the movie that I was talking about, the Into the Badlands. But you see, in that one, there was an in-between person who was appointed by this landowner, i.e. the king, all right, to make sure that these people report exactly what they are reporting to, they are supposed to report, the half that they are supposed to give. And so they have these people we call clippers, all right? They had clippers. Now, what the clippers do is that if you don't give the fair share as negotiated, what they do is that they will just kill you. That's all. So you see, that was how audit was about. So you see, in this era of audit, what this clipper was looking for is that you do not defraud. So there will be no fraud, all right, in terms of the dealings or what you are supposed to give to the king. There shouldn't be any fraud from that. You should give us exactly as you want to, okay? So that is what they were checking. They were checking any form of misrepresentations. Okay, so that is what they were all about. Now, fast forward to 21st century audit. What you see is that here, indeed, we have seen the landowners taking the form of what? Shareholders, right? Or what we call principals, or what we call what? Owners. So you see, that is what has happened. Then over here, instead of farming, you see the people who control the resources of these people, the shareholders, are what we call what? The board of directors. All right. Some people may call them agents, okay, and others will call them control officers. So you see, that is what happened. It's the same thing. Now, you see, in the olden days, the essence of audit then was to check fraud and misrepresentation. However, when you come to this 21st century or modern day, what you realize is that these people here are what we call what? The auditors. Now, here, it is not like they are checking fraud or they are checking misrepresentation. What they are doing what is basically to express what? Opinion. Now, what opinion is it about? Why are they expressing an opinion? You see, the separation that exists between these people and these people has brought about so many concepts we want to discuss. Number one is the agency theory. Number two will be the agency problem. Then the same thing has given rise to what we call the agency cost. Okay, there is a concept of what we call a fiduciary relationship. Concept of fiduciary relationship. Okay, there is a concept of what we call separation of ownership. Separation of ownership. And control. Okay, there is a concept we call accountability and stewardship. All right, so all these things have come about because of typically, and the last one I want to, which we call information asymmetry. All right, information asymmetry. You see all of these things in the manual that I've sent you. Now it is because, so you see, I've cited example of Cristiano Ronaldo and Messi having money and establishing business, but not being the people to handle those business. Now the issue of shareholders having ownership, shareholders building up a company, but not being able to control it is what I've termed here as ownership and control. So this concept is what I'm referring to. So the concept of ownership, separation of ownership and control, is trying to explain that there is one side of a relationship. So you have a two-party relationship whereby one side has ownership but doesn't control the entity, but the other side that has control doesn't have the ownership. So that is the breakdown of what we mean by separation of ownership and control. And that kind of relationship gives rise to what we call what? The agency relationship. So the agency relationship is a theory, all right, that is based on the separation of ownership and control concept. Okay, so that is what you need to understand. Now, you see, the thing is that, so the managers needs to be truthful. These people needs to be truthful with the resources that the shareholders have given them. That is what they are supposed to work with, all right? And this kind of a relationship whereby one person has to be truthful, we call it a fiduciary relationship, a relationship whereby one party holds a duty of care to the other, duty of care to the other. And that is what we call the fiduciary relationship. So it is a relationship whereby one party holds a duty of care to the other. And that is clearly what you are seeing here. So in this case, which party holds the duty of care for the other? Hello? 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 Please, I need your response. And kindly note that this class is recorded. And if you are listening to yourself and at some point it's all about silence, I don't think it will, you even enjoy listening to.
Yes, sir.
Yes. So I was asking which party of this relationship I've outlined here holds the duty of care for the other.
Yeah, so management holds the duty on behalf of the shareholders.
This is the part you call management, right?
Yes.
All right. So normally the right statement is the board of directors. Okay. Let's use the correct concept. We are professionals. Okay. So let's make it the directors, the board of directors. Yes. Okay. So that is that. Now, what happens is that if any case these people decide to shift their attention and pursue their own agenda, if these people decide to pursue their own agenda, then it gives rise to what we call what? The agency problem, okay? That is it. So we said that management needs to be truthful and accurate in managing and controlling the investment of the shareholders who are the principal. But in some cases, management suffer from self-interest overrides, and therefore are not truthful and fair in managing the principal's investment. And that is what we call the agency problem. Now, in terms of solving the agency problem is what we mean by what? The agency cost. So the cost that you incur. So audit is actually an agency cost, okay? So it's an agency cost. The cost that you incur in solving that problem is an agency cost. So I've explained a fiduciary relationship. So a fiduciary relationship is a relationship of utmost good faith, all right? Whereby one party owes a duty of care to the other, and that is what I've explained. These are basic concepts you should know about audit. What we are just doing is just a revision of the audit and assurance paper, all right? And this is the information asymmetry I spoke about here. Now, what is information asymmetry? The reason why you go to work and you come home and your wife will go to work and you come home, and one person will ask the other, how was your day? Is because you didn't know how the day of the person went. And therefore, you have to ask to get the information. So you see, what happens is that information is one-sided. And unless it's released from one side to the other side will never have the information. I.e., information is just here. Everything, all the information are in the bosom of board of directors, or what you call management. Shareholders will only get to know of any information when it is communicated to them, all right? And that is where the auditor comes in. So the auditor becomes the middleman to ensure that any form of communication that is moving here, all right, is actually checked in the mirror of truth and fairness, all right, before they get to the shareholder. And that is what audit is about, okay? So basically, that is what the audit is for. Now, what you need to also understand is that after getting the concept, there is an audit standard which we call ISA 200. Okay, ISA 200 is saying that for the auditor to be able to carry out their work effectively, they need to actually have 4 things to guide them, okay, So when you talk about the general objective of audit, first of all, the general purpose objective, the general objective of audit is just of external audit is just two things. Number one is to obtain what we call reasonable assurance. Okay, what is the reasonable assurance? You need a reasonable assurance that the financial statement that has been prepared are prepared according to the standard and they are in whole, free from any material misstatements. Okay, so you need that reasonable assurance. And when you get the reasonable assurance, then you can state your opinion. So we talk about obtaining reasonable assurance. And number two, what do? Reporting. And it is out of this reporting, you get your what? Audit report. And the audit report is where you express your opinion. All right. So this is the objective, all right, of the audit. Okay, that is the objective. That is the objective. And the objective is seen in ISA 300. But what this ISA 200 is saying is that for the auditor to be able to carry out this job, 4 things must happen. Number one, you need ethics. Number two, you need what we call professional skepticism. Number three, you need what we call professional judgment. Then number four, what you need is what we call sufficient appropriate evidence. You need sufficient support. If you are able to be able to carry out these 2 main objectives of audit, then you need these 4 things. So we will learn ethics. What is professional skepticism? It's an attitude that includes having a questioning mind or being alert to conditions that may indicate a possible misstatement due to error or fraud, and a critical assessment of audit evidence. So that is what professional skepticism is about. We will talk about professional judgment when you need to go straight to the point and be so objective and deal with the situation at hand in terms of expression of your opinion. Then we will also look at sufficient appropriate evidence. So you realize that I told you evidence is like 25 marks. So this is the scope of what we are doing. So now, coming back to the definitions you people gave me for audit, this is what audit is about. Indeed, all the answers that you gave me is correct. All right, everything that you gave me is correct. But one thing you need to understand is that this course you are doing is not just called audit. It is called audit and assurance. Our key focus will be the assurance because this is what it's about. This is what we are doing, obtaining reasonable assurance. So you see, when we say assurance, assurance simply means confidence, all right? It's like a lady who has woke up in the morning, dressed up, sat behind the mirror, dressed up. She has seen her beauty, done her makeup. But you see, that mirror, what the mirror communicated cannot be compared to the lady meeting a guy and the guy saying, you look very beautiful. That one speaks more to them than the mirror. So you realize that they get more confidence by the words of the man that has been spoken. All right, exactly what auditor does. What the auditor does is to express his opinion, and that expression of the opinion is what will give the shareholders confidence about what the management or the board of directors are communicating. So basically that is what, so we will be focusing on the assurance. So assurance is the confidence, then the audit is the process. So we say that audit is the process, and the process ends up with assurance. So assurance is the product. Okay, so these are some basic things that you need to know about what we will be doing ahead of us. So what is an assurance? An assurance, like I've said, is an engagement whereby a practitioner, which is the independent auditor, expresses a conclusion designed to enhance the degree of confidence to the intended user, which is the shareholder, other than that responsible party, which is the management themselves. So that is what the International Audit and IASB handbook defines what assurance is. So our focus will be most of the time in assurance. And like I've expressed, audit here is the process. assurance is the standard, the product. Okay, now the most important thing we are supposed to look at from hence forth becomes the elements of assurance. There are 5 elements of assurance. Please, these are basic things. They are done in the audit and assurance paper. Okay, they are done in the audit and assurance paper. They are basic audit and assurance concepts that you should know. But we are just going over doing a brief recap of what the paper entails. Okay, because some of these things, they bring it for 2-3 marks. Now, let's move straight to the element of assurance. There are 5 elements of assurance. The elements are therefore the subject matter, which is the financial statement. The subject matter is the financial statement. What you are doing is your expression of your true and fairness of it. That is the subject matter. Then we have the 3 parties involved. In every audit, there are 3 parties involved. You have the responsible party, which is the person who prepares the financial statement. Please, it is the directors, not the financial accountant. The job is actually meant for the directors. They are just hiring accountants to assist them in doing it. Then we have the insurance provider, who is a practitioner, i.e. what we call the auditors. Then we have the intended user, who are the shareholders. So we have the subject matter, the 3 parties involved. Then we have the standard and the audit report. All right. So the stating of the assurance provider's opinion is what we call the audit report. So then we have the standards. So herein, we are looking at the company standard and the international standards for reporting and all those things. So, and then the last one is efficient or sufficient appropriate evidence, which is, so you see, like I stated, I will need your knowledge about the standards because they will present you a case, they will give you a financial statement. Something will be wrong in the financial statement, and it is by your knowledge of the standard will make you know that something is wrong. If you don't know the standard, then it means that you can't. You'll be missing 20 marks straight, 25 marks straight. So please, your knowledge about the standard is needed even in corporate reporting and at the same time in audit and assurance. So you need the standards, you need evidence. All right. So that is that. Then most importantly, you have to understand that there are 2 types of assurance engagement. We have the reasonable assurance and we have the limited assurance. Now, these 2 are key for you to be able to separate them because sometimes they will quote this and they will tell you to distinguish between the 2. Now, understand that there is actually a concept we call absolute assurance. But you see, most of the time, audit is not about doing 100% of the work. That is why they take samples of populations. They take sample of your invoices. They don't take everything unless you are doing forensic audit. This one, you take a sample of population, then you examine them to make a generalization about how true and fair the financial statement. So we have what we call reasonable assurance and we have what we call limited assurance. I'm going to explain these 2 to you. I had a nice experience in my tuition at UCC when the COVID came. Now, I went to class and there were fresh students, level 100 students who were coming to do, there were level 200 students who were doing audits. Now, I went in there and I saw nice ladies. Unfortunately, I didn't see their face. They were all wearing nose masks. Now, what happens is that if you're a young person and you enter into such a situation and probably you are looking for somebody to date, you need the face of the person to be attracted to you. Now, in this case, they are all wearing nose masks. You can't have the full picture of the person. And so therefore, if you go and say anything to any lady during the COVID time, what happens to you is that you are putting yourself in risk. Because if the person is wearing nose mask and you say something and you commit yourself, by the time the person removes the nose mask, probably you are stuck. You can't go back again. So, I mean, what you need to know is for the person to remove the nose mask. And that is the distinction between these two things that are posted here. One is a limited assurance. The other one is a reasonable assurance. The reasonable assurance here is when the person removes the nose mask. The limited assurance is when the person is wearing the nose mask. So what is the distinction between the two? I'm going to separate, talk about the two. How do you distinguish between the two? Now, let's have this. So we have what we call assurance. And we are talking about confidence, all right? Don't forget, the meaning of assurance is about confidence. A report that speaks of confidence. And I said we have reasonable assurance. And we have limited assurance. Now, when we say reasonable assurance, what we are trying to say is that it is a type of audit engagement where you reduce risk. You reduce risk to the very bare minimum. Yes. So like me going to talk to the lady or do something or try to yab the lady or anything, you realize that I need to reduce the risk to the very minimum by letting her show the entire face. Because if I don't see the face, I mean, then it means that I may do something that at the end of the day, you go in, you say whatever you want to say, finish. The person remove the nose mask and you are like, oh my God, I need to back out. So before you even say anything, you reduce the risk to the barest minimum. So if before the auditor expresses the opinion, he has to reduce the risk to the barest minimum. And so we say that in a reasonable assurance audit, you need sufficient appropriate evidence. Sufficient appropriate evidence. And in terms of getting this sufficient appropriate evidence, you use what we call thorough procedures, serious procedures, rigorous procedures. And these procedures are what we call substantive testing and test of control. So these are the rigorous procedures that you use. And you realize that once you get those evidence through the rigorous procedures, the next thing that we talk about this one is that in terms of this one, what happens is that through the thorough procedures, you see the reporting or the expression of the opinion is positive worded. When we say positive worded, it doesn't mean it is always saying that the thing is true and fair. What we are actually basically saying is that the thing is straight. It's either true and fair, or it is not even true and fair. Okay, so that is what we are saying. So you see that at the end of the day, it is positively worded, and to the extent that the financial statement is, we are looking at the conformity to standards. Conformity to standards. That is basic. That is where you generate this kind of response. If it is not conforming to the standard, then straight away it is not true and fair. We will learn about more of these things in audit report. It's not true and fair. But if it is, then you can say it is true and fair. And therefore, finally, what we say is that we look. This one is it expresses situation of a high confidence. All right. So if the thing is not true, then it means that yes, I have confidence that it is not true. If it is true, then I know that okay, that one today is a high level of confidence. So we said that it gives a high level of assurance. All right, so high level of assurance. So basically that is that. Now, be careful. A typical example of this form of audit we call reasonable assurance is what we all know as the external audit and what we call statutory audit. You realize that when GRA come to your office, what they do is very rigorous. They want evidence. They use a very rigorous activity, a positive weather statement of how much your tax liability is, and the conformity to the standard. The standard in the GRA audit will now be what? The GRA Act, the income tax, the revenue administrative, the LIs, and all those things. Then, if you owe, you owe. I mean, there's a clear-cut, high level of assurance. So that is that. But over here, yes, you want to reduce risk. But the risk that you are reducing it to what we call negotiated accepted level. All right, just an accepted level. Okay, so where you want to converge and say, okay, so this at this point it is fine. So at that level, that is where we are looking at. Of course, this one to you, we need sufficient appropriate evidence. But the way you will get the evidence, where this one is a very rigorous and a thorough procedure, this one is just a lightweight. Okay, it is not that rigorous of a procedure. Okay, so what this one, so let me call it a somewhat procedure. A typical example you would do is some analytics. All right, so you do some analytical procedures. You do some enquiries. All right, these are the major audit activities that you do, procedures that you do to obtain your sufficient appropriate evidence. Then you realize that this one, where this one is positively worded, this one is negatively worded. I'll give you a true statement that expresses the two. Then you realize that there is a huge difference. All right. So where this one is about conformity to standards, you realize that when you talk about limited assurance engagement, you are just concluding that the subject matter, all right, which is the financial statement with regards to some probably suitable criteria, based on that suitable criteria that you have. I mean, not purely on the standard or anything, but the negotiated one. Just a minute. Okay, so we are looking at a situation where you have some suitable standards or suitable criteria. We are talking about its plausibility to the engagement that you sign, to the engagement letter. Okay, then the last one, we say it expresses a lower level of confidence. Okay, and a typical example of these ones are all forms of reviews, any form of review work that you do. All right, some non-assurance engagements and other non-assurance engagements. Like you doing the payrolls of people and other stuff. So you see that one, the suitability is limited to as you agreed in the audit engagement letter that you signed, not on standards like IFRS and all those things. You agree on the suitability or the suitable criteria, suitable standards, basis which you can say that this work is done perfectly or not. So that is that. So you see in the exam, what they can ask you is that they can tell you to distinguish between external audits and reviews. These are your points. Because you realize that this one is an example of this one too is an example of all these things. So please take note of that. And it can come, they can ask you to do that thing for 5-7 marks. Just understand what it's about, all right? So that's that. Let's move on to the next thing we want to talk about. So I've cleared all these things. And here we want to now talk about the legal framework, all right? Now, we all know that audit is a very sensitive cause because of this issue, the collapse of Enron and Arthur Andersen, all right? And even in Ghana here, we talk about Capital Bank and Atuasian, all right? The issue of Capital Bank and Atuasian and the auditors who audited these accounts. It has made the audit work very sensitive. And not long ago, we heard that 3 weeks after Silicon Valley has been audited, the company collapsed down, the bank collapsed, and that somebody had to buy the bank for just $1 or £1, sorry. So you see, the audit work has become very, very sensitive, all right? And it therefore needs some to spark up what we call regulations, because trust is diminishing in the auditing industry. Yes. So to regain what we call these trusts in the audit we are talking about, then there is 3 incentives that has been issued. One is harmonization of audit procedures by users. Number 2 is about quality. So we talk about quality control, then the adherence to ethical code. So we have the IASB or the IAESB from the IFAC Foundation, IFRS Foundation, and Audit Foundation, coming up with this board, education board, to give education, all right, and also talk about accreditation of those who give education. So even in Ghana, the ICA centers are giving accreditation, right? Before you can have a center, you need to apply for accreditation. And these days, it is becoming dangerous. Well, it's a conspiracy theory that we have heard. We don't know how true it is. That sometimes when you are registering your exams, they ask where you attend your classes. Is it true? Do you fill that form when you are filling your this thing for the exams?
Yes, it's true.
Yeah, and there is coming some conspiracy theory about if the center is not registered and all those things. But what I know is that as part of the examiner's report, sometimes you read what they say is that probably students are not getting tuition from proper centers, and it's also a way of grading the centers. All right, that this center is good and they can advise students to go to those kind of centers and all those things. But there has been some conspiracy theory that says that if you expose these things and some people are at beef with those, but you see, when the examiner is marking the paper, there is no way you have your exam center on the answer booklet. So it's what you write is what is marked and what you get. Yeah, so I just don't want to go into those kind of allegations, because people raise allegations about some centers being marked down and things, and some centers also trying to push up their name, and so they have to negotiate their way through. Well, all those things. I mean, if you write your paper, you concentrate on giving the right answers. You don't bother yourself around. All right. Now, so we have this ICE bar, which is for the ethical code for professional accountants. We all heard about it. Those of you who do corporate reporting with me, you've realized that we've dealt with it, and we have the public interest oversight. All right. There is this issue of ICA producing accountants and ICA being the same body to regulate accountants. I mean, so when you go to UK, there is an oversight body, all right, and the oversight body is not made of all accountants. There are non-accountants there. Okay, so that one makes it a proper oversight. All right, so that is the UK case. This year we don't have it that much here. All right, so you go through and learn all those things, and we have the Institute of Chartered Accountants. What they are supposed to do, according to the Act 2020-1058, it talks about the dual aspect of the chartered accountancy. promoting the study of accountancy, and also regulating the accountancy profession. All right. So what do? That's why you are going to school at this hour, learning about it. They regulate it, the training, the induction of members, and the regulation of members. Then you have some other institutions to like the Bank of Ghana that regulates the banks, all right, and the SEC, all right, the SEC and the NICs and all those things, regulators. But most importantly, since we are doing audit, we want to focus here the regulatory requirement of audit in Ghana. Here we are looking at the legal requirement, okay, the legal requirement of being an auditor in Ghana. Before you can be an auditor in Ghana, according to Section 138 of Act 990, it says that you have to be a qualified and a licensed person in accordance with the Chartered Accountants Act. And this is the act. All right. Now, what is in that act? I went to verify, and I've actually I have that act since I'm a member. I also have that. All right. What is in there is that, first of all, you need to write the exams and you need to pass the exam. You need to now be inducted into the institute as a member, where you pay your dues and you do your CPD to become a member in good standing. As a matter of fact, you need to have experience in working in an audit firm for a minimum of 3 years. All right. So it's qualification. So when you have that, then you can sit for the license. So you are qualified and you apply for the license. Then you use that one to an accountant, an auditor, sorry. An auditor. And this license is renewable every year. And that one too, there is another fight that is coming from the stand of GRA, saying that before ICH releases members in good standing, they should make sure that these members submit their tax clearance certificates. So, yes, because you cannot say a professional is in good standing when he is not practicing or he is not doing as the law requires him. All right. So that is that. And number 2 is not be qualified under subsection 2. Subsection 2 is just saying that if the person is an officer of an associate company, no. If the person is a partner, no. If the person is an infant, a bankruptcy person, a person deranged, and all these things, all right, are what we call disqualification of a person to be appointed as an auditor. This is section 138 and section 139. All right. Now, so in simply put, what we are saying is that an auditor is a person who is qualified and who is not disqualified by any other act of Parliament. Now, before you appoint an auditor, the law says in section 139 that the person shall not be appointed as an auditor of a company unless that person has first, before his appointment, assented in writing to be appointed. So you don't appoint any person, has to give you the assent to be appointed, then you now appoint him. These are legalities, so you have to be very careful about that. Then after that, you have to ensure that the person is duly qualified under section 138. You remember section 138, qualified and licensed under the Chartered Accountancy Act. Then what again? Not disqualified by any other enactment of Parliament. Okay, so that is that. So we said before being appointed as auditor, the auditor shall communicate with the retiring auditor and request the retiring auditor to make any representation. So all these things, we are saying that before you go into a job, a person who left the job, you must be in contact with the person to find out the eligibility of your appointment. We will talk about this one, the cooling period of 6 years, cooling 6 years, then you come back for 6 years. That one is the legality in our Act 990. We will come back and look at that when we are dealing with current issues. All right. Then Who appoints an auditor? You have to understand there are 3 people that can appoint an auditor in different circumstances. So we have the directors who appoint the auditor at the first auditors of the company, and they do that. So there are 2 situations where directors appoint auditors. Number 1, the first appointment. Number 2 is when there is a casual vacancy. I don't know how many of you have experience in going to register a company at the registrar general, a registrar of companies, but you know that when you are going, there has to be a space for an auditor. If you don't have an auditor, you cannot establish a company. So when you go there, you see people standing there, oh, please, do you have an auditor? Then if you don't have, they take your form, they give you an auditor. There is implication to that, which means that when you prepare your financial statement, you need to go and look for them to be the ones who audit the financial statement. It's very, very important. So at that first time, the first appointment, you see, it is done by the auditors. And also anytime there is a vacancy, then that one too, they come in and they do that. All right. Now, the next thing or the next category of people is the registrar of companies himself. Now, when there is a vacancy for a continuous period of 3 months and it is not filled by the directors, then it means that the registrar general can come in and appoint an auditor for you by force. All right. So what you are supposed to know that an existing auditor shall continue to be in office until that auditor ceases to be appointed or qualified as auditor, and that auditor resigns in writing. Okay, so he will continue to be there. But key here is that the members or the shareholders appoint auditor during their annual general meeting. Okay, let me hereby say this, and I've made a note here, which is very, very important. I think you should be interested in taking that. What happens is that within 14 days after any change in auditor, you must inform the registrar of companies. All right. So if you change an auditor, you have to notify the registrar of companies in 14 days or within 14 days. If you don't, please, you suffer a penalty. Number 2 is that auditors of public companies are appointed from one AGM to the next AGM. So technically, if we appoint you from one AGM, by the next AGM meeting, your appointment has expired, and there is no law that can revoke this one. There is no law on our land that can revoke this one. All right, so take note of that. As for a private company, you can be there till you are removed, but bear in mind the 6 years rotation. All right, it's very important. Then we come to the remuneration of the auditors. As for that one, whoever appointed the auditor, remunerate him. All right. So that is that. So if it is the directors who will remunerate. If it is the board, the shareholders, the shareholders. If it's the registrar, it will be the registrar. Then we come to removal of an auditor. This one is a very technical aspect you are supposed to understand. It's very serious and you need to understand. Now, here, if you want to remove an auditor, you don't just sack him. It doesn't happen. So first of all, what you do is that if you are going to remove an auditor, then the person who have that intention for that auditor to be removed, what you do is that you have 35 days, not later than 35 days, right, to do what? To forward your resolution, because 35 days to the AGM, because they are going to meet as an AGM. And if you have anything to say that the auditor has to be removed, by our law, you have not less than what? 35 days before the AGM. All right. And this notice will go to the company secretary. Now, the company secretary will therefore send that copy to the auditor concerned, all right, so that he gets ready when he is coming. All right. Now, what happens is that the resolution is then passed at the AGM meeting where everybody is there. So they pass the AGM meeting. But the key thing that you are supposed to also understand is that the company that has given members notice of resolution at the same time, all right, must also do the same thing in the manner which the company gives notices for meeting, unless it is impracticable to do so. What does that mean? So in these 35 days, you will serve the letter to 35 days to the AGM, you serve the letter to the company secretary. Now, the company secretary is supposed to circulate this notice to all the members. Now, what this point is saying is that if you send it to the members via email, if you send it to the members via an email, then you have to send it also to the auditor via an email, not later than 21 days. So that is what you have. So not later than 35 days, you give your notice. It's supposed to be circulated to the auditor and the other people not later than 21 days. But the manner in which you serve the notice must be, you serve the notice to the auditor must be the same manner you serve notices. All right. So if the manner you serve notices is email, then this one too has to go to the auditor via an email or mail. So you can't send your notices for normal meeting via email, and for the auditor, you send it to him via WhatsApp. It becomes illegal. All right. In that case, everything that you do will become illegal, and it will not have any legal effect. So these things are not just for your paper writing. They are things you are supposed to know as a professional. Now, of course, unless we are saying that in this case, the 35 and the 21 days works when the shareholder is the one that appointed the auditor. However, if it is the directors who appointed the auditor to fill a vacancy, or it is the registrar general who appointed the auditor in the case of a continuous absence of 3 months of an auditor, then the law says that what should have been done in 35 days to the AGM will be done in 14 days. And what should have been done in 21 days in terms of service of the notices will be done in 7 days. All right. So that is what you are supposed to do. All right. So if the resolution is passed, then the resolution shall not take effect until the conclusion of the annual general meeting. So if the annual general meeting has not closed, the auditor is still the auditor. So until it is closed, then it means that, okay, then auditor, you are no longer our auditor again. We talk about resignation of an auditor. This is auditor wants to resign. This is not the company removing him, it's the auditor who wants to resign. So all that he needs to do is to serve the company a notice, a written notice of his resignation. All right, so that is what you do. And the resignation is effective on the day the notice is received, unless there is a specified date in the letter. All right, in the letter. Other than that, it's effective the day the notice is received. All right. Now the company, when it says that they must accompany such notices with a statement that there were no circumstances surrounding or connected to their resignation, which they consider should be brought to the notice of the members. But if there is, then it means that they can also have a detailed statement that deals with the circumstances around. All right. And the company who receives the letter must then send a copy to all the members, also the registrar of companies. All right. Yes. Any question at this point? Any question at this point? Now, when you talk about the right, you need to know is the right to access and right to access and all those things. So we have the right of the auditor on appointment. He has the right to access the books. He has the right to access the books. He has the right to attend AGM. He has the right to receive copies, right to apply to court for any direction in relation to any matters that are arising in terms of his performance of his duty. But on resignation, the auditor has the right to be heard, and he has the right to request the company to circulate notices about circumstances that surround his resignation. Auditors have duty, and their duty is a fiduciary one. They hold a duty of care to the members of the company as a whole. And so therefore we say that they must do their work in faithful, diligent, careful, and ordinary skillful way. All right. So these are the simple, these are all audit and assurance stuff. All right. Now, and so these are some of the duties you see here. They must comply to regulation, express their opinion, to be sound in terms of ethics and all those things. Then we talk about corporate governance. Corporate governance. All right. So the corporate governance, please, this part too is very, very examinable. You need to be careful around it. But over here, you are doing advanced audit and assurance. So our focus on corporate governance. The corporate governance could, apart from the Sarbanes-Oxley that is practiced in US, the UK one was amended, or let's say redeveloped, in July 2018. And they brought out 5 pillars about corporate governance. Corporate governance is just about how an entity is controlled, all right, or directed. The 5 pillars that they brought out is this new. These are the 5 pillars. Now, what you are supposed to know is this part. This is the part that you are supposed to be careful about. So when we talk about committees, we talk about the audit committee, and the audit committee is in charge of audit, risk, and internal control. And so these are all audit issues, all right? As for board leadership and company purpose, we are talking about the development of the mission and the vision statement and the long-term vision and long-term goals of the company. So that is what we have here. All right. So we are talking about having a board, entrepreneurial board. And so we talk about the board structure. We are talking about having knowledgeable and experienced balanced set of people. The key is knowledgeable and experienced balanced set of people. So part may be knowledgeable, the other one should be very, very what do we call it? Experience. Okay, so together you have a balanced board. In terms of age, you also have a balanced board. In terms of gender, it is good you can have a balance, all right? But what is most important here is that they should have time for board meetings and stuff. Okay, they should have time for board meetings and stuff. All right. Now, aside that, we talk about division. The division is very, very important. And please note that the CEO and the chairman of the board should be 2 different people. So the chair leads the board, all right? And we talk about the CEO who can be an executive director. So the CEO is an executive director. So the chair of the board should lead the board, but the board should include appropriate combination of executive and non-executive members. All right, these are corporate governance issues, and these are pure audit and assurance revision. We are building up to the main thing you are required to know in the advanced audit and assurance part. That one, so I will send you the video on that lecture. You have to watch it. All we need to do is to practice question solving. All right, so you have the chair. We talk about the executive directors who should have sufficient time to have to meet their board relationship responsibility. We talked about that. We've talked about then composition, succession, and evaluation. I've talked about the balance of the board, and but it has to go through selection of members of the board has to be very rigorous and all those things. And the key thing is this one, the 4th pillar. Is the 4th pillar. Audits, because we are doing audits, and we also do risk and also internal control. That is the key pillar. All right. So what is this one saying? The board should establish a formal and a transparent policy and procedures to ensure independence and effectiveness of the internal and the external audit function. That is very, very important. Not only that, the board should present a fair and a balanced understandability of assessment, and the board should establish procedures to manage risk. These are three things that are very, very important. So in terms of internal audit, if there is anything to report, you have to report to the audit committee. All right, and we have the remuneration. Remuneration of committee should be made up of non-executive directors. So this is the audit committee. So the audit committee, this is what we are talking about. They have these functions, this objective to increase public confidence and credibility. All right, these are so confidence and credibility. We are talking about assurance. And they assist the directors, especially the executive directors, in meeting their responsibility regarding financial reporting. How do they do that? That is why they set the internal control systems and things in the company. All right, and strengthening the independent position of the company, company's external auditor in providing additional channel of information. All right, so composition is key. All right, it should be made up of independent, non-executive directors. The committee shall have a minimum number of 3, and in some cases, if it's a small company, then 2. But the chair of the commission, the audit committee, should not be a member of the audit committee. All right, should not be a member. All right, so that is very, very important. He should be a member of the board probably, but not the member of the audit committee. And at least one of the members should have relevant experience in financial matters. All right, so please, these are important things that you need to know. Okay, all right. So these are all knowledge. You read it, you keep 2 or 3 points, then you'll be fine. Then the advantages and disadvantages. Audit is for confidence, all right? Audit is basically for confidence. So that is the major advantage. And we all know that audit helps you to get your things done correctly, because it reviews your inefficiencies for you to be able to correct it. The disadvantage is that it is very costly and it disrupts your normal operational activity. If you have been in the finance or accounting department before, you understand what I'm talking about. They'll be just disturbing you. I need this document, I need this, I need that, I need this, I need that. All right. So the rest, I mean, they are not something that you should actually kill yourself about. But this part, which I'm going to reserve for our next meeting, is very, very important. So I have just 20 minutes. I want to pause here and I want to invite questions for what we've discussed so far. If there is no question, I'll ask the question. But next week, I'm going to finish this thing off, the ethical and the regulatory aspects. But I'll send you a video beforehand. Then when you watch it, and I also finish what we will be doing next week will just be this one, this ethical aspect. All the others, then we will start the past question. We'll start dealing with the past question. And I need you, as I said, to watch the videos. And this part is not in the video, so I'll spend a lot of time in trying to deal with this IFAC code of ethics, and because that is majorly the major part of your exams. All right, then we will start the past questions, how to practice the solving of the questions. It's very, very important. That is the main thing. All right, that is the main thing. All right, so please, in the few, I think we have like 19 minutes to go. All right, so please complete these ethical aspects. We will go through them. We will finish next week. Then the other week, the first Tuesday in May, what we will be doing is to start solving the past. Okay. Please, so any questions so far? Any questions? Any question, please? Mr. Amos. Hello. Yeah, Prince.
Yes, sir.
Any question? If there is no question, me, I'll ask you a question. What are the elements of assurance engagement?
So, not
Yes, what are the elements of assurance engagement?
really.
Hello, your line is very bad.
I don't know.
Yeah, so Mr.
Hello.
Amos, what are the elements of assurance engagement? Because that's the most important thing you are supposed to know from this course, then corporate governance, from this session we've done today. What are the elements of assurance engagement? We discussed 5. What are they?
Sufficient and appropriate evidence.
That is 1, yes.
Then procedures.
Procedures.
Procedures are not part.
Can we talk of positive assurance?
Positive, no, it's not part of the element.
Yeah. We have a thorough procedure.
No, those assurance. I want the element of assurance engagement.
Okay. Then subject matter.
Okay.
Then we have the 3 parties that are showing themselves.
Efficient.
Then from there we have the. Hello.
Yeah, I'm listening.
Element of assurance engagement. Subject matter. Talking about the financial system.
Okay.
What is entailed in the financial system? They have the 3 parties. They have the responsible party, be the director, the practitioner or the assurance provider. Then we also talk of the intended user.
Okay.
Then we spoke of the report itself.
Okay.
And the standard applied.
Yeah. So these are the 5.
Then we made mention of evidence at the end of the show.
Yeah. So these are the 5 things. Please, these things, you can't forget them. You can't. And the types of assurance engagements are 2. Which are those?
Reasonable assurance and limited assurance.
Yeah, so you can explain those, right?
Yes.
All right. Then the next key thing is corporate governance. What can you sum up in the corporate governance issue that we discussed? What can you sum up what the corporate governance is about? The 5 pillars, but most importantly, what the audit committee is about. The audit committee, you do well for me if you can remember anything about the composition and their functions. All right.
Okay, sir. You said the audit committee should be, the members of the audit committee should not be more than 3 non-executive directors.
No, so it's the 3 is not like it's a flat thing. In a big company, they should have a minimum of 3.
Minimum of 3, okay.
Yes, but in a small company, they can be 2.
Okay.
All right. Yeah, so that is that. But then what I need you to do, the takeaways from this class is the assurance, the levels, elements of assurance, the types of assurance. All right. It's very, very key that you get. Then when you are done with that, then we come to the regulatory. The regulatory, what you're supposed to do is about the auditor. Learn about the auditor. Who qualifies to be an auditor? Who appoints? So you talk about learn the appointment, remuneration, resignation, removal. Is very, very important. Understand that the legal things surrounding it. Then 3, we come to the corporate governance issue, where your focus should be on the audit committee. Because if there is anything in the audit work that you are doing and you find not any, you don't understand everything, you need to report it to the audit committee. And so you need to know the composition of the audit committee, the functions of the audit committee. Please get to know these 3 things that we have discussed. You can revise your notes. You would want me to share the audio of the video of this lecture too, right?
Yes.
Yeah, but I'll send you an
Yes.
video, okay? And that video, I want you to watch beforehand, because audit here is not about the knowledge. What is this? What is that? What is this? What is that? It's about how you can answer your questions in the exam. So,
Uncle Thomas.
yes,
Uncle Thomas.
Yes, please.
Please, with the regulation,
Mm-hmm.
please, I'll beg you to echo it again.
Okay, so let's just do a quick one. Let's do a quick one.
Sure.
I have like 12 minutes, but let's just do a quick one.
Yes.
So what you are supposed to know is who the auditor is. So you see, it's not everybody that works in an audit firm that's an auditor. All right. So now, the law says that if you want to be an auditor, then number 1, you have to be qualified and licensed under the ICAG Act 1058. This law was passed in 2020 when the COVID was around. I remember getting the bill they gave it to all members for it to be reviewed if you have any. Then number 2, what the law says is that you should not be disqualified by any other act of parliament. So you can be chartered, but if you are disqualified by any other act of parliament, then it means you still don't qualify. All right. So this is the qualification of an auditor. All right. Then what we learned is about the appointment. But in the appointment, it says that you cannot just appoint an auditor. The law says that before you appoint an auditor, the auditor must first consent to you in writing that, okay, I've agreed for you to appoint me as an auditor. Okay, so that is that. Once he consents, then you bring in the next step of ensuring that he qualifies with these two qualifications as passed by the law. This is section 138 of Act 992. These are legal things. Then the question is, who therefore appoints? Who appoints? Who appoints? And I told you that 3 categories of people can appoint. The directors can appoint, but the directors only appoint when there is a vacancy or the first appointment of an auditor. The first appointment we are referring to when you are going to register the company. You see, at that time, the board of the shareholders hasn't gone for any AGM meeting for them to appoint an auditor. When you are going to promote, so that is why we are saying that the promoters, when you are going to establish the company, when you go to the registrar office, they will ask you who are your auditors. So at that first appointment, the directors can appoint. Okay. Then we have the registrar himself, the registrar of the company. The law says that if there is a vacancy for a continuous period of 3 months, then the registrar general or the registrar of companies can appoint an auditor for you. Then the last category of people is the shareholders who appoint at the AGM. All right. Now, I said that in a public company, when you are appointed as an auditor in one AGM, in the next AGM, it expires automatically. They need to reappoint you. All right. So that is the public company. But in a private company, you can be there. They don't have to reappoint you. You can be there and you'll be rolling over, rolling over. But there is a caveat because the law says that you can have an auditor for 6 years. After 6 years, you need to change the auditor for 6 years. Before 6 years' time, the one here can come back. All right. This is a cooling period for 6 years. Okay, so that is something you are supposed to. All right, so that is the appointment. Then we talk about removal. Now, in removal, what we are saying is that if you want to remove an auditor, then not later than 35 days. Not later than 35 days to the AGM, you should serve a notice. You should serve a notice. All right. Then if all is well. Then if you serve the notice in 35 days, what happens is that the secretary who received the notice not later than 35 days to the AGM must circulate this thing to the auditor not later than 21 days. So 21 days. So if a member wants to remove the auditor, he should serve a notice not later than 35 days to the AGM. And this one says that it should be circulated to all of the members, including the auditor himself, who will be removed not later than 21 days. Now, the law says that the manner in which you serve notices should be the same manner you serve this notice to the auditor. So if the notices are done by mail, then serve the auditor too by mail. All right, you treat everybody equally. So now, then when you meet at the AGM meeting, then you pass a resolution, all right, to remove the auditor. But the auditor has the right to be heard. If you are passing the resolution, you have to explain the circumstances at which you are removing the auditor. Now, all these things we talked about is when the auditor was appointed through this one, shareholder. But if the auditor was appointed by these two means, what we are saying is that this 35 days now becomes what? 14 days. And this 21 days now become what? 7 days. It must be noted that within 14 days you change an auditor, you should notify the registrar. All right. These are law. When you keep it, I mean, it's legal matters. So these are law. Now, that is removal. Then we talked about remuneration. I said the remuneration of an auditor, whoever appoints. So if the directors appointed, they remunerate. If the registrar will remunerate the shareholder that remunerates. All right. So that is that. Then the last thing we talked about, I think the resignation. Okay. The resignation, it is the auditor who is resigning, so he will serve a notice. All right. And in that notice, he can explain the circumstances, okay, why he is resigning. Or he can decide not to state the circumstance, not to declare the circumstance under which he is resigning. But one thing you should understand is that before you agree as an auditor be appointed in the first place, you should see the retired auditor, the one who was there on the job before you are coming. You should be in contact with him and find out if there is any reason why you should also not accept the job. All right, it is courtesy, professional courtesy. All right, you first talk to him. If he says don't take the job, then you find out the reason why he's saying don't take the job. If the reason is laudable enough, you don't take the job. All right, so this is it. Then the last one talked about the responsibility of the auditor. The responsibility, we say that they hold a fiduciary. It's a fiduciary relationship whereby the auditor was upheld Now, in that case, you're supposed to do it respectfully, truthfully, and diligently. All right. Then we discuss the rights. Okay, the rights we talk about on appointment. If you are on the job, what will be your right? You have the right to attend AGM meeting. You have the right to access the books of the entity. You have the right to access the book of the entity. You have the right to receive written resolutions, all right, at any AGM meeting, okay? But when you resign, you have the right for them to circulate, ask them to circulate the circumstances surrounding your resignation, okay? And you have the right to also be heard if you were being removed. You have the right to be heard, all right? Yes. So these are the things that I explain around the legal aspect of it. Okay. Any question? Please, any question?
Okay.
Hello. Any question? We are 2 minutes away to end. So please, next week when we meet, I'm concluding on this 20 mark aspect, and we will look at there are some of them. That is why I'm sending you the like ISA 240, ISA 250, and all those things. I'll send you the video, you watch and ahead, so that when we meet, I want us to be very fast to getting. The most important thing is we able to understand how you answer the question. Uh, so when we finish the legal aspects next week, and then following week we will stick to uh, the past question. So please, your assignment is this is your assignment. So you are supposed to do the first 65 pages of this manual that I've sent you. Please don't take this thing for granted, I beg you. So first 65 pages plus the video that I will send. Okay. So that is what the first 65 pages is about. Okay. So please spend time and do the first 65 pages. We are going to apply them, start solving the past questions. The next time, the upper week, we will spend time and deal with all the past questions around that. 20 marks. So please, you can't joke around it. You can't joke around it. Yeah, please, any other question? Any question? If there is no question, and please, the time is 6:30. So today you joined late. So please, let's do well to join exactly at 6:30 so that we can cover our 2 hours. Audit is boring because you are not calculating anything, calculating this, calculating this. What I'm supposed to give you is the techniques to answer the exam question. And like I said, if you read this thing, the first 65 page, and don't just read with your eyes, read with your mind and get some notes down, okay? And we will use that to deal with the past questions. If you finish the 65 page, all that I will do is to deal with the ethics, the SAFI. Once I'm done with the SAFI, then we go straight to solving the past questions. So next week I'll complete the ethical aspect. Like I said, we are using 3 weeks. So I'll complete the ethical aspects. Then we will solve the past questions.
Please, can we get this?
Can you get what? Hello? If it is this recording, then I will definitely send to you. So we've done chapter 1 and
Yes.
chapter 2. Next week, we will finish the chapter 3 and the chapter 4. Then we will deal with the past question, 20 marks. Then the following week, the same thing. 2 weeks, we will finish. I'll send you all the videos beforehand. Then we will start. So we use 1 week to go through the manual. Then the other week, we solve past questions. Part C, the same thing that we will do. All right. So please bear with me and let's be fast and solve more questions so that you'll be prepared. All right. Like I said, since I started teaching audit, I've only recorded that one self. It wasn't even advanced audit. It was normal audit and assurance. Only one person. I've taught more than 50 people. They are even more than 100. Yeah. So yeah, one. Yeah. So yeah, 50, 50. Yeah. Yeah, they are more than 100. And I've recorded only one failure. So please, you can't destroy my record. I beg you. So bear with me and let's move fast. Okay. So, please, any other question? All right. If there is no question, then please, like I said, let me send you the recording now. Send you the additional recordings. I'll see you, God willing. Those of you doing CR, I'll see you on Saturday dawn and Sunday. Thank you very much.
You're welcome, sir.
So you see, I've solved the issue of the Zoom